Hello everyone, welcome to the Viet Finance channel, a channel dedicated to serious traders. We cover technical analysis for the Vietnamese stock market and cryptocurrencies. I've got a lot of requests from friends and colleagues to do the analysis for the VN index. So today's a great day. I will take this time and take this opportunity to do some analysis for the VN index. Well, this is going to be a very complex analysis. Well, if you want to do like detailed analysis, it will never be easy. Okay, it will never be easy, and it will never be quick. But I'll try to cover this as fast as I can today. And in order for you to understand this analysis, you need to have at least knowledge of two things. Okay, two very important things in trading. First is the Elliott wave counts. You need to know the Elliott wave theory. Okay, and the second thing you need to know is the Fibonacci retracement. Okay, those two are the prerequisites for this. In order for you to understand what I'm explaining today. Okay, so first off, we have a chart of VN index right here. As just a quick glance, as you can all see that from the recession from 2007 2009, we started our bullish period from 2009 up until now. Okay, so this is the proposed count that I'm having. Okay, so basically 1 2 3 4 5, we got a first wave and we got a second wave. This is the grand cycle wave, and we are currently developing, developing the third wave. Okay, so I will not do the analysis from this point backwards, but instead I'll do the analysis from this point onwards. Okay, you need to bear with me on this. Now, this is the proposed count that I'm having at the moment. Okay, so in the start of our third big third wave, as you know, a third wave always contain 5 waves, and that we have 1 2 3 4 5, and this is my proposed count. Okay, this is my proposed count. So we're having 1 and 2. The two front runs the 786 a little bit. You know, this is the stock market in Vietnam, and it usually stops between the 618 and the 786. This is very common. I see this all the time in all the stocks and the index as well. Okay, so this is my 1 2 3. Okay, so within here, if you can zoom in, you can see that my first wave, let me get it here. Okay, so the first wave has 5 waves also. Okay, 1 2 3 4 5, that qualifies it. So this is the second wave. Okay, it fronts on the 786. This is a very complex retracement, guys. This is a very complex retracement. It wouldn't surprise me for people to get dazed and confused here, because well, usually second wave, it retraces very straightforward, but in case it's really complex. Okay, so I got my 1 2, and this is my proposed third. Within the third wave, I also have 5 waves, and this is how I count it: 1 2 3 4 5. Okay, 1 2 and 3 4 and 5. How's that so? You need to know this. Okay, so this is my 1 2. Very easy to see with your own eyes, right? Well, let's take a look at this. If I were to pull the Fib from this point to this point, as you can see here, once again, prices stops at the between the 618 and the 786 level. As you can see, that it happens the same thing over here as a 1 2, and this is, we got our mini 1 2 here. Okay, so, and I got my third here. How do I know that? Well, I run the projection, Fibonacci projection from of the 1 off of the 2, and this is, we got the 1618 extension, and the third stops right at the tick. So I confirm this as a third. And once I confirm that as a third, my job is to verify that the third also has 5 waves inside. And this is what I got. I got 1, 2, 3, 4, 5. Okay, so a lot of guys would argue with me that the 4 cannot cross into the 1 territory, but I would argue this. Okay, in a highly leveraged market, we can accept the 4 to enter the first territory by just a wick. Okay. So I got my 1, 2, 3 of the big third, and I have to work out for the 4. Okay, so this is what I have, guys. This is what I have. I have A, B, C, D, E for the 4. Okay, and this is a really complex, it's a very complex retracement. As a rule of alternation, if the wave 2 retraces deep and simple, then the wave 4 is going to be shallow and complex. Okay, if it's short in time, this is going to be long in time. As you can see here, it took us roughly 500 days to consolidate, right? And over here, it only took us, let's take a look at this. Oh, there's something wrong with mine. It only takes you 200 days. This is the rule of alternation. You need to know that fact, okay? You cannot get a better count than this. I don't think you can get a better count than this, okay? So if I got my 4 done, I have to work for my 5th, okay? That puts us right here. This is my 5th word, the big 5th right here. As you can see here, we have an extended 5th wave. Why did I say that? Because the 3rd is already extended, but now because we're in a very super bull market, look at the volume here. The volume rise sharply going up. Okay, so look at this. But look, this man, a lot of Elliotticians, it would be very hard for them to count this, because this is the worst enemies for Elliotticians, because there's a little pivot points and there's a lot of confusions. Okay, so what I have here in the 5th wave, I also have 5 waves. Okay, so this is what I propose: 1, 2, 3, 4, and 5. How do we know so? Okay, at first I didn't know. I thought this was a 1, 2, and then what? 3, 4, 1, 2. I don't know. It's very hard. It's very tough, right? But this is what I got. This is what I got. Okay, I propose this as a 1, 2, and when I run the projection of the 1 to the 2, I got the 2, 6, 1, 8 to the tick, and I'm going to label that as my 3rd. Okay, now I got that as my 3rd. I have to work for my 1, 2, 3, 4, 5 in the 3rd, and this is what I got: 1, 2, 3, 4, 5. All right, and then we come down retracement for the 4. As you can see here, this is very rare. Okay, less than 8%. Less than 8% of us retrace of wave 2 retrace to the 236 level. Very rare. Okay, less than 8%. Okay, this is in a very extreme bullish case. So usually most of the time, wave 2 is going to retrace back to this level right here, the 618 and the 786, especially for the Vietnamese market. But since we were in a very bullish trend, oops, okay, let me get that back. Since we're in a very bullish trend, we got this really shallow pullback, right? Okay, let me get this off to decluster the chart, and then we'll keep going. Okay, so that I got my 1, 2, and that confirmed as a 3rd. As you can see, the market hits the target. The market, guys, in trading, if you don't believe, if you are fundamentalist, if you believe in fundamentals, I totally agree with that. I do believe in fundamentals as well, but technical analysis is so important, because Fibonacci levels, retracement, and extension is so correct, and it's so to the point that sometimes it surprises me, right? If you get the 1, 2 right here and you run the projection and you get a 3rd right here at the 2618, how does that happen? How does that happen, right? Well, I'll tell you what. In every market, when people do trading, there's algo targets. Okay, there's algo targets written to trade certain things and take profit and exit at certain points. Okay, so it is very important for you to understand Fibonacci levels. Okay, so continue on. We got our 1, 2, and then I got my confirmed third, and we down to the 4, and then we ran up for the 5th. Okay, and within the 5th, it's very hard. You have to go down to the 1 day to get the count out of this. But as you can see here, 1, 2, 3, 4, 5. Right? 1, 2, 3, 4, 5. We got our 5 waves so clean. So by far, this is the best count that I can come up with for you guys to understand, to see the market as it is. Okay. Now take a look at this. It's very, very, very important for you to understand this. Now take a look at this. If I run the Fibonacci level from 0 to the 1, and this is the negative 414. Okay. Note this level. Right? Okay, if I run projection from the mini 1 to from the 2, and this is the 4, 2, 3, 6 level. Okay, and guess what? This is a huge confluence zone right here. This is a huge confluence zone right here. As you can see, let me put that in darker color. And look at this. The market, what? It took profit right here. The people that invested right here, the breakout right here, or the people that invested the breakout the breakout right here, they took profit from right there. And this is no coincidence, guys. Trust me, this is no coincidence. I can't explain this to you how important Fibonacci level is, but this is no coincidence. Okay, initially I had my projection for the 3rd to stop at 1375. That was my initial projection. So basically on March 2018. Okay, so people were so excited because we got this huge candle and a monthly candle. This green candle I'm talking about right here. Right? And with great volume, we had great volumes, guys. And everybody's like, oh, we broke our last resistance, right? The major resistance. But take a look at this. Right? That is our all-time high back in 2007. And take a look at this candle, right? We poked through it with a wick, but we did not close above it. Okay, but we did not close above that level. So a lot of people, so this is a huge resistance, guys. Plus with a confluence level, confluent Fibonacci levels, right, like this. So right here, I stop all my tradings. I stop all my tradings from right here. Okay, and if you were to look, and let's take a look at this. Okay, right. So this is what I got. Okay, I got my RSI level right here. So this is the 3rd going for the 5th. As you can see here, the RSI did not make a new high. It did not make a new high. That gives me a huge divergence right here. Okay, and what divergence in an uptrend tells you? What does it tell you? Okay. It tells you exactly one thing, and one thing only. It tells you to get the hell out. If you're long, you get the hell out, and you don't buy no more. Okay. So if I would have to work for a broker, at this time in point, I would probably say to clients that, hey, if you are buying right now, it's not a great time to buy right now. This market is so oversold, and we got this divergence right here. Okay, and we got this divergence right here. So I would probably tell my clients to go, hey, it's not the time to buy. It's not the time to buy. Okay. So we have it. So here you have it. You have 1, 2, 3. We finished the 3, and we're heading for the 4. Okay. In fact, we are already in the 4. Okay, let me tell you a little bit of this. I will go in detail in explaining and do some analysis on the fourth, see if we actually bottom out right here, and this is actually the start of the fifth wave up, or are we just sideways ranging? I'll do this analysis some other time, okay? But let me show you something very interesting, very interesting. Okay, bear with me for a minute here. Let's take a look at this. You would be very, very surprised. Oh, let's take a look at the monthly chart. Look here, guys. Look here. Look. This is what I got, right? This is what I got. Take a look at this. It took us 241 days to do our impulse, and then 800. Let's take a look at the previous move right here, right? Okay, so we got 1, 2, 3, 4, 5. This is our first wave moves, and we impulse in 1186 days, roughly. I counted it. Maybe this is the correct number, maybe not, but roughly, yeah. Let me take a look at this. Yeah, 1186, and it took us 732 days to retrace as a second wave. You got your ABC here. Okay, if you would take this number divided by this number, what you get? 0.617 is damn near close to 0.618. Okay, and 0.618 is what? 0.618 is a Fibonacci level. Okay, it's a Fibonacci number. Okay, it's a very famous Fibonacci. It's the golden ratio, as you would know it, if you guys are familiar with the term. Okay, now take a look at this. Our first wave, 241 days. Okay, and then it took us 832 days to retrace. So if you take this divided by this, you get 3.45. On the third wave up, okay, extended fifth. Okay, well, we got 2,282 days to impulse, and then right now we're currently having like 3 months, 120 days. If you were to take 120 days to divided by 2,000 something, you're only like 5-6%. Okay, so in terms of time perspective, I don't think in terms of time perspective it's the time of retracement is too short. Okay, the consolidation period is too short. So I don't think we're done here with the fourth yet, and I don't think we're done here with the fourth yet. Okay, so I don't think we're done with the fourth yet. Okay, plus and also look at this. We have an extended fifth wave right here in the third. And usually what does that imply? It implies one thing, that the correction is going to be deep and long. And guys, take a look at this. This is a monthly chart, okay? Take a look at these two candles, right? We try to push up, try to break the previous high, but we couldn't. And take a look at this. When we couldn't break that, look at how vigorous the move down was. It's so vigorous to the point that everybody was like stunned. They didn't know what the hell is going on, why the market moves like that. They didn't even know. They didn't even know what moves like that, okay? But I knew at that time that would happen like that. Okay, so to me, I think with the correction we're having here, right here, is not done yet, okay? So let me ask you this: why did the market stop right here? Why did the market stop at 886? Why? Okay, it's very simple. It's very simple. If you were to put in the 21 EMA, as you can see, the market went down, touched the 21 EMA, and bounced up. Well, this is a really good sign. This is a really good sign. Why do I say that? Because if we cross the 21 EMA, that would be totally bearish. It would be totally bearish, okay? And that would actually worries me more. But hey, guys, I could be wrong here. So in my opinion, we're not done with the four yet, of the big four yet, retracement yet. I'll do some analysis some other time. But the fact that it didn't cross the 21 EMA, that it gives me courage to think that we might be still in the bull run here. Okay. So right now it wouldn't be the time to buy because of all this, because the market is not clear yet. As you can see here, if you push it down to the one day chart, daily chart, you can see that we're currently ranging here, currently ranging here, right? That we broke that. Okay, we broke that, but look at the candles. They're so weak. So I think it would go sideways for a little while and then finally decide to go up. It needs to have the time to recover. Okay, it's just like when you have a wound. Take a look at this. This is the wound that you have. Okay, and it will take time for you to recover, for the market to recover. It will take time for the market to recover. Right? Take a look at this. Take a look at this wound. Take a look at this wound. Take a look at this one. It took us more than 2,000 days to recover from the previous high. As you can see that. All right, that's it, guys. Thank you so much for listening. If you can give me a thumbs up or a like button, that would be great. If you can understand what I'm telling you right now, and especially if you want to do me like me to do like an analysis for the market or any stock in the Vietnam Stock Exchange, then drop me a message. I'll try to do the analysis for you. Okay. Well, that's it for now. Goodbye. Have a good day.